Rohr here with an early, concise highlight on Friday, November 14th, 2014. It's currently 6 a.m. U.S. Central Time. Coming to you a bit earlier than usual because we wanted to have this posted up well ahead of the U.S. retail sales report that's going to be kind of pivotal today. And the other key macro factor we've noticed is the inexorable weakness of the oil market. We'll get back to that shortly. So what does all that mean to the markets? Well, as we saw yesterday, after the, again, S&P 500 short-term hourly chart on the left, 30-minute on the right, as we saw, after setting a new high, new all-time futures high up here at 2043, the market dipped off, but we had been pointing out the importance of the short-term channel, the channel up since the pre-election dip back on last week on the 4th, on Tuesday the 4th. And this caused just a minor down break around 2030. We had already had support. The market didn't quite get down to around the 2025 to 22 area. That should remain support, but the question is, even with a market that has been higher earlier today and now is back to steady at about 2034 or so, can it even break back below the short-term gap and the what is now a minor negated down break at 2030 to the trading lows around 2027 to even get into any lower support? Or if it starts pushing up again, might it push up toward the more significant the resistance oscillator at 2050, topping line at 2060 this week. Now those move up $5 in the next week. I'd have no reason to expect why we wouldn't be up to 2055 on the oscillator next week. The topping line moves up around 2065. So there's plenty of headroom if the market can hold on in here. Even if it reacts lower, there is some congestion around the 2022 to 25 area, again at 2018, but really need to take a look at the old highs around the 2013 area. That was both the lead contract and back in September, right into expiration. And just right after that, December rallied a bit from its discounted level to leave its high at around 2012.5. And if they react back down, that's going to be your bigger supports with serial lower supports on false down breaks, gaps, and the like as you would get closer to the 2000 area. And that pretty much does it for the short-term view of the S&P 500.